Hello and welcome back for another Fantom price prediction update, and in this video I'll be diving deep into the technical analysis here on the Fantom chart. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And before I can proceed with the technical analysis, allow me to focus a little bit on the fundamental analysis, where here on the Forex factory you can see that in a few hours we are going to see the FOMC meeting minutes, and as a result of that I'm expecting a lot of volatility in the market, and I think that's the reason as to why we are seeing a bit of a massive crazy price action here on the Fantom chart, where you can see that on the charts we have lost the 20-day MA here on the 4-hour chart, which is now acting as resistance. We have also lost a key significant area of support at around the $0.3572 mark, which is the area highlighted on the charts using that yellow target area. We have also seen a breakout out of a chart pattern that we had been trading within, which is this descending channel, which has now given us a massive breakout to the lower side, giving us a low at around the $0.3249 mark. And to give you what I have been expecting here on the Fantom chart, basing it on the Elliot structures, if I zoom out on the charts, you can see that I have this Elliot structure in blue, where after seeing our low on the 23rd of March, we saw that impulsive move to the upside, completing the formation of that first wave to the upside, giving us a high at around the $0.53 mark. Then we started a corrective structure in the formation of these larger Elliott wave count 2, whose minimum target areas between the fib level 0.5 and the fib level 0.78 I have highlighted on the charts using this red target area, which is an area that we have fully maximized. And I said to you in my previous videos that if by any chance we see a breakout out of this red target area to the lower side, then that would be suggesting a more corrective structure here on the Fantom chart. And you can see that has happened, and at the time of this recording we are trading below this significant retracement area for that second wave. And what that means for us is that there are high chances that Fantom is now breaking even further down to give us a reset of the low of this Elliott wave structure that I have right here in yellow. And this Elliott wave structure right here is what has been giving me my long-term count here on the Fantom chart, where you can see that after seeing the December lows, we peaked in a 5-wave structure, completing the formation of that first wave to the upside. Then we saw a corrective structure in the formation of this larger Elliott wave count 2 in a move that gave us a low at around the $0.3 mark. And there are chances that now that we have lost our significant minimum retracement area for this second wave of this micro Elliott wave count right here in blue, there are high chances that Fantom might continue seeing further breakdown and give us a reset of this low at around the $0.32 mark. So there are high chances that very soon Fantom is going to get to the $0.3 mark and even possibly break that low and continue seeing further breakdown. And in case such a move plays out, then whatever we have been seeing over here, we can term it as a corrective structure, maybe in an ABC corrective structure, expecting one more leg down in the formation of that wave C. We also need to have in mind that in case the FOMC meeting has a positive impact on the crypto market, then there are chances that we might see a bit of a bounce to the upside, and maybe from there we can continue heading further down to fully maximize this yellow target area, which lies between the $0.4166 mark and the $0.2728 mark. And that is the minimum that I'm expecting Fantom to do here on the short-term scenarios, and those are my breakdown targets, where we could possibly get a reset of the low at around the $0.3 mark, and on the worst case scenario even lose that low, seeing one more leg down at around the 0.28 and possibly see one more leg down at around the $0.2738 mark. And also taking a look at the indicators here on the 4-hour RSI, we are trading at around the 21 mark, meaning we have managed to get into the oversold region. Also taking a look at the MACD, we have been able to print a bearish cross, suggesting further breakdown. So let's be patient and see how that plays out, and I'll be keeping you updated.